Welcome to another Plato ASX reporting season update. We're right in the thick of the February reporting period now. And once again, I'm joined by Dr Peter Gardner for all his views and analysis on the latest key results for income investors. Peter, we have to start with BHP. The big Australian's been a big name in the Plato Australian Shares Income Fund for many years now, and it delivered a good result.
Yeah, it delivered a great result, Jared. Its profits were actually up 22% on last year. And what some investors may not have picked up is that we always used to call BHP the big iron ore miner in Australia, but it's actually turned into the big copper miner in Australia. And its copper earnings were actually higher than its iron ore earnings last year and more than 50% of profits. So that was a great result from BHP. Its dividends were actually up 46% on last year. So after decreasing its dividends for the last couple of years, now it's bounced back up, which is great for dividend investors. So it actually increased its payout ratio from 50 to 60%, which even though its profits were up 22%, it was able to increase dividends by 46%. It announced a new copper project as well, so they're not sitting on their laurels. They're trying to get even more into copper, which looks really good at current prices in terms of the value that it adds to BHP. The share of its silver production, which is an unknown commodity that most people didn't realize BHP had, but it raised a bit just over $4.3 billion US. In selling those rights to someone else. And so that was great for able to increase its dividends further because it put more money on its balance sheet.
Let's turn to another big result, JB Hi-Fi. Rising interest rates have put a bit of pressure on retailers, but it doesn't seem to have impacted JB Hi-Fi.
Yeah, so JB Hi-Fi share price has been under pressure since about October last year when we got the higher than kind of expected inflation numbers and the market started to price in interest rate increases, which should naturally be poor for retailers. But JB Hi-Fi's results were pretty good. Their profit sales were up 7.3% on last year. EPS was up 7.1%, which is marginally above expectations. And because of that downward trend in its share price recently, it actually has bounced back strongly over the last couple of days. Its final dividend was up 24% on last year, and that might have surprised some investors, but they did actually announce back in August that they were increasing their payout ratio from about 50% up to 70 to 80%. And so that was positive, but we expected it to come through that way, payout ratio of 75% for this result. Its sales in January are a little bit slower, so that was the one disappointment. And they actually pointed out in the result that more people are starting to shift their behaviour in terms of rather than shopping in January, which was typically when Australians would shop for bargains, now shoppers have moved that to November during the Black Friday sales. And so that was positive for its November sales, but then slightly weakened its January sales. So all up a good result for JB Hi-Fi.
And Peter, just this morning we had Telstra report. Telstra's a name that actually went back into the Plato Australian Shares Income Fund just recently after some time on the bench. Has the move paid off?
Yeah, it has. Overall, it was a really solid result from Telstra. Its profit was up 8% on last year, and it actually increased its dividends by 10.5%. And so you might think with an EPS of 9.9 cents, but actually paying out 10.5 cents in dividends, you'd think they're paying too much. But the reason for that was actually their cash EPS was up at 14 cents per share and increased 17% on last year. That was because they've been able to increase their efficiencies with regards to their CapEx. So they've been able to reduce their CapEx, which has meant their depreciation continues to go down, but they're actually not spending as much on renewing their network. So that's really positive, and they've been able to increase their dividends going forward. They also had a slight top up of their buybacks by 250 million, so that's positive. And they actually showed that their mobile subscribers are going up by 5% with really good cost control. So all up a good result from Telstra.
Pete, finally, let's look at a lesser-known stock in the fund, and that is Ventia Services. It's an infrastructure service provider. Tell us a bit about its result and its dividend.
Yeah, so this was actually a stock that I raised on a buy, hold, sell episode not too long ago. And it's a little known stock. It's, yeah, as you say, infrastructure services. So it's very defensive. It has a lot of kind of telco kind of revenue as well as defense contracts. And so it was actually able to increase its profits by 13% on last year and have an 18% increase in dividends, which equates to a 5.4 gross annual yield. Increased its buyback by $100 million and guided, this was the kind of strength of its result, that it guided for 7 to 10% profit growth, which was about 4% above expectations. And so the market really liked it. So this is a name that, yeah, most income investors wouldn't naturally hold in their portfolio, but we've liked it for the last while.
Well, Pete, just over a week of results to come, but it seems like it's been a pretty good results period for income investors. For anyone that would like any more information about the Plato Australian Shares Income Fund, you can visit plato.com.au, or if you would like to speak to someone from the team, email distribution@pinnacleinvestment.com.